Hello traders, Gary Wagner here, just about 12:20 in Honolulu, 6:20 in New York, day after Christmas, December 26, 2018, and this is the Daily Report for Gold and Silver. An incredible move in U.S. equities today did take gold pricing down off of the highs, although out of the precious metals complex, gold was the only metal to close lower. As you can see on your screen, we're currently trading at $12.6980 basis February's COMEX contract. That puts it down about $2 on the day. The high, which is extremely noteworthy, is $12.8230. The low on the day came in at $67.40, so we closed much closer to the low than the high. But I think most importantly, we are still well above the averages that we look at, specifically the 200-day moving average, which gold traded above that for the first time since May earlier last week. Now, silver gained almost 2%, closing at $15.10. Platinum gained 1.2%, just shy of $800, and palladium closed the gap between current pricing of gold and silver at $11.8750. Now, the dollar index provided some extreme headwinds, moving up about 0.6% and is currently fixed at 96.60. But the big news is the largest single point move in history in the Dow Jones Industrial Average, gaining well over 1,000 points at 1186.25, closing at 22,878. We had similar moves in the NASDAQ as well as the S&P. S&P gaining almost 5%, 2467, and the composite gained over 5%, almost 6% at 6554. Traders, incredibly interesting day with the market really taking off. I remember looking at the market early this morning, and it was trading up about $7, ended up closing down $2 on the day. And to give you an idea of the speed and dimensions within today's move, we simply have to look at a 1-hour candlestick chart. We can see that this is Christmas here, the 25th, and then this is the beginning of the day here. And we can see that it opened at around 76. And from that particular price point, it moved from 76 up to 82. That, of course, was the high of the day. Now, my belief is, of course, it was dollar strength that really took this market down. In fact, we'll put up a Kitco Gold Index to show you that the dollar is predominantly the cause for the sell-off, but the dollar was reacting favorably because U.S. equities were trading so strongly. We definitely had a risk-on market environment and investor-favored moves in the equities markets as we saw the largest single-day move in the history of the Dow Jones Industrial Average. Nonetheless, I am still extremely bullish on gold, and to look at that and explain why I am so bullish, we really need to look at a daily candlestick chart. So traders, of course, we are long gold currently. We're long at $12.68 and change, so we've got very little profits, but about $1 profit in the market right now. What impresses me the most about how gold is traded on a technical basis is the fact that we had an extremely strong move as this market traded and closed above the 200-day moving average. That was the first occurrence of that happening since May of this year. Then when we look at the action that we had towards the end of last week, we had nice climbs, and then the last trading day before Christmas came in and the market traded as high as 69, pretty much where we are trading at right now. Now, as you know, I am looking at two major levels of support. The most major of those levels happens to be the 200-day moving average, because what that signals is the fact that we could be witnessing gold having shifted from a bullish trend that was an intermediate bullish trend to a bullish trend that is a long-term bullish trend. And based on my long-term studies, I think we are going to head into an extremely bullish set of moves next year and into 2020. In fact, I'm currently working on my 2019-2020 gold outlook Bitcoin outlook, and silver outlook, and those will be released right around the New Year's, maybe a little bit before or a little bit after, but right within that timeline. Right now, the resistance area we need to take out on a closing basis is the 0.38 level, and that comes in at $1,275 per ounce. And traders, just to give you a hint or a prelude to what we're looking at in terms of my outlook for 2019 and 2020, I draw your attention to this very long-term chart. This chart, of course, is a 2-week candlestick chart, and it also has our major Elliott wave count. The chart that I will be showing you during the outlook has got the intermediate and minor numbers filled in, and also my prediction to where I think gold will end up when it concludes its fifth wave. And what is so really important to me and exciting to me is when we look at the entire complexity of this market, really since about 2005 when it had its first major rally and took the market up in terms of trading to about 1,000. From there, we broke down to about 700. I am labeling this as a major second. And then our major third, of course, is what took us to our all-time record highs at 1,900. From there, we had a long and protracted correction. And this correction really is a B, and then a C. But of course, there's an intermediate count within that, which takes us to our current action, which is a fifth wave. Now, there's a couple of ways that we want to look at forecasting where that fifth wave could go to. But what's really important is that wave 1 and wave 5 are typically equal. And the one thing that we have to take into account is wave 3 can never be the shortest of any of the impulse waves. So we could see a move rather than just a 1-to-1 relationship of 1 to 5. We could see a market move that is a 1.21, 1.38 percentage or extension of wave 3. And that's kind of the numbers that you're seeing here. These are extensions that we are looking at based upon what I just talked about, the beginning of wave 3 to the conclusion of wave 3 and where it could go. And I've got different marks here, and I'll talk to you about in the outlook exactly where I think the most likely or highest probability is to achieve that particular goal. This has been Gary Wagner, wishing you as always good trading, and I am really excited about what I think we'll see next year. Have a great day. Bye-bye.